Welcome to this explainer. It's a heartbreaking reality, but every single year, staggering amounts of capital are just completely wiped out. We're talking about returning expats and retirees who pour their hard-earned savings into local business ventures that just aren't the right fit. It's tough to watch. So today, we are going to map out the ultimate blueprint for returning expatriates, retirees, and transitioning corporate professionals. We want to show you exactly how to safely turn those decades of hard-earned savings into successful, sustainable local businesses. Starting a business is incredibly rewarding, absolutely, but it's also one of the most challenging journeys you can possibly undertake. So we're going to explore exactly how proper mentorship and smart risk reduction strategies can literally be the difference between a thriving enterprise and a devastatingly costly mistake. Okay, so here's our roadmap for today. We're going to cover the realities of the startup landscape, how to protect your savings, and making that massive mental leap from employee to owner. Then we'll dive into a proven evaluation process to avoid those common errors, how to leverage powerful networks, and finally, why we really need to start looking at mentorship as an investment, not an expense.
Let's jump straight into Section 1, the reality of starting up. This is where ambition meets the market. And let me tell you, launching a business in a fast-growing, highly competitive economy like Bangladesh comes with some harsh realities.
We really need to ask ourselves a seemingly counterintuitive question here. Why do so many folks with immense ambition and plenty of cash still end up failing? I mean, imagine that feeling for a second. You have the burning drive, you've got the capital you saved up over decades, and you feel like you're doing absolutely everything right on paper. Yet, despite all of that, the doors still close within a year. So what's going on? Why does that happen? Well, the truth is, businesses usually fail not from a lack of hustle, but from a profound lack of preparation. People fall into these incredibly common traps that can quickly drain a lifetime of savings. Imagine a returning professional who spent years working in the Middle East. They pour their life savings into a flashy local restaurant just because they happen to like the food and the vibe. But they completely ignore the fact that the local neighborhood is already totally oversaturated with dining options. That is exactly what investing without proper market research looks like. Throw in choosing the wrong sector right out of the gate, overestimating demand, poor financial planning, and weak branding. Yeah, you've got a guaranteed recipe for disaster. Success today requires rigorous strategic planning and deep, deep market intelligence. Moving right along to Section 2, protecting expat and retiree savings. Let's look at how those pitfalls directly impact this specific group, because here, security has to come first. If you've spent years working abroad or you're sitting on a hard-earned retirement fund, your absolute biggest threat is the psychological trap of blind investing. This usually happens when decisions are based on casual assumptions or, very often, family recommendations. Returning expats tend to rely on well-meaning local family members to guide their investments. And hey, those family members usually have the best intentions, but they often completely lack the rigorous business acumen required to actually assess market viability. It happens every year. Thousands return home with valuable savings and international exposure, only to lose huge chunks of their nest egg because they bypass hard data and pour money into unverified opportunities pushed by their social circle. When you contrast taking a blind risk with using a calculated strategy, the difference is basically night and day. Blind risk relies entirely on gut feelings and pure hope. But objective evaluation, which is exactly what a professional mentor provides, relies on hard empirical data. A mentor rigorously assesses market demand, deeply understands the actual competition, and creates incredibly realistic profitability projections. Think about a retiree whose absolute biggest concern is the terrifying fear of losing their retirement funds. A mentor evaluates an opportunity objectively to protect that capital. Instead of a highly volatile startup, they might point that retiree toward much safer, more predictable trading businesses or service-based enterprises that perfectly align with their past experience. That brings us to Section 3, which covers a crucial but often overlooked hurdle, the shift from employee to owner. This is a massive psychological pivot. Think about the sheer scale of the mindset shift required here. As an employee, even a very high-level corporate one, your focus is mostly on executing specific tasks within a predefined framework. But when you become an owner, the shock of that pivot is immense. You aren't just executing tasks anymore. Suddenly, you're the CEO, the finance department, the marketing team, and sometimes the person who has to figure out why the office internet isn't working. You have to oversee the entire strategic and operational framework. A mentor is absolutely vital here to help seasoned professionals prepare for this transition, objectively evaluating the risks and creating a structured, far less stressful path into entrepreneurship. So, how do we actually systematize this transition? Let's get into Section 4, avoiding costly entrepreneurial mistakes through the evaluation process. Trade and Investment Bangladesh, or TNIB, uses a fantastic sequential framework to assess market demand and operational feasibility. This proves that success is a replicable process, not just a roll of the dice. Their mentorship goes deep. First, they evaluate true market demand, like, is there actually a customer base for this? Second, they rigorously assess investment requirements, and that doesn't just mean the sticker price. They factor in all those hidden operational costs that always blindside new owners. Third, they analyze the competitive landscape. Who are the heavy hitters and where are their weaknesses? And finally, they determine the actual profitability potential. This step-by-step approach massively reduces the risk of sinking capital into the wrong venture. You can think of this as the golden rule of our explainer today. Making this one foundational choice correctly dictates absolutely everything else that follows. Finding the perfect intersection between what the market demands and what you are personally capable of doing is non-negotiable. You could be a brilliant manager with incredible operational efficiency, but if the market simply doesn't want what you're selling, your operational feasibility means nothing. If you choose the wrong business, no amount of hustle, late nights, or hard work is going to save it. Okay, so let's say you have that perfect idea. Now you face your next hurdle, Section 5, leveraging networks and TNIB, or the power of connection. There's a saying that business growth is often driven by relationships, and it literally hits the nail on the head. We get so hyper-focused on our products, our services, and our spreadsheets that we completely forget the human element. Think about an expat who's been out of the country for, say, 15 years. They have likely lost touch with their local professional network, and this matters immensely because having a groundbreaking product means absolutely nothing if you don't have the reliable professional network to connect that product with buyers and distributors. This is where T&IB actively steps in to bridge that exact gap. They offer incredible networking benefits, starting right off the bat with buyer-seller matchmaking, helping you recruit reliable business partners and dealers so you aren't forced to do all the ground-level sales yourself. They also guide businesses through complex international regulations to access lucrative export markets. But honestly, perhaps the most important thing they do for new entrepreneurs and returning expats is deep commercial due diligence. They run background checks on suppliers, verify legal documents, and thoroughly investigate potential partners before you sign a single contract. This significantly shields you from the immense risk of local fraud. It's a real game changer. All of this culminates in our final paradigm shift. Section 6. Mentorship is an investment. We really need to reframe how we view guidance. So here is the absolute bottom line. Mentorship is absolutely not an optional luxury expense. No way. It is a critical, risk-reducing investment that fundamentally safeguards your future. A lot of aspiring entrepreneurs hesitate because they look at consulting or mentorship as this added upfront cost. But let's be real about the alternative. The cost of one failed international shipment, one poorly negotiated supplier contract, or completely botching your market entry, that will easily cost 10, 20, or even 50 times more than the fee of a good professional mentor. Mentorship lets you learn from seasoned experience rather than paying the massive, completely unforgiving tuition of trial and error. So, as we wrap up today's explainer, I want to leave you with this final thought. Are you ready to make the most important investment in your future? Will you rely on mere assumptions and luck? Or will you partner with a professional mentor, like the experts at TNIB, to ensure your hard-earned savings build a lasting, sustainable legacy? Seeking systematic guidance really can transform your entrepreneurial dreams into lasting achievements. Thanks so much for joining me today.